Hello, everybody. It's Mark Johnson with Guaranteed Rate, and June is finally over. Today is June 30th, and after today, 6 months of the year, the half the year is already gone. And so, welcome to summer. We're going to have a hot July. I think it's going to be a great weekend here. We start celebrating the 4th of July and starting tonight. And reason why I love this holiday is because I love our country so much, and I love the opportunity to be able to help people reach their dreams of home ownership. And so I've been doing this a long time, and I just thoroughly still enjoy helping people get into homes. So a lot of people are saying, "Are you doing any loans?" Yeah, I'm doing some loans. Not as many as I did a couple of years ago, but a couple of years ago, interest rates were about 2.71 as an average overall. I think it was like December of 2020. Today, which we'll go ahead and look at. Let me share my screen here with you. Today, interest rates. Let's see. Why is this not coming? Here we go. Today, interest rates are 6.71, and so that's 4% higher than they were back in November of 2020. And I watch interest rates, and I think I can predict them, and then I'm sorely disappointed in my predictions. So I don't even predict anything anymore. And the reason why is the market is just crazy. Let me show you my screen here with the bond market right now. Actually, this is the 10-year treasuries. You'll notice that the 10-year treasuries were their highest here. Let's see, that's got to be, what is that? Somewhere here, like May of 2022. Here, that's the highest. And at that point in time, interest rates were right around 7.21, somewhere in that range. And then you'll notice that they came down right here, and we started seeing some great rates at about 6.25%. And then they went up a little bit, and this kind of range right here was the 6.25 to 6.5. And then they've gone from 6.5 to now 6.71 is what it's been over the last week. Over the last month, it hasn't changed very much at all. I mean, we've hit 6.71 twice, and then there's been a couple of times where we've been a little bit lower, and then we've gone back up to this 6.71 again. So let me just kind of make this chart just a little bit bigger so you can kind of see what the last month was. You'll notice it's just a very tight trading range, and it's hit this top support level. Hopefully it doesn't go over that, because if it does, we're going to have higher rates even still. I think we'll get back in the sevens, but my prediction is that we're going to start seeing interest rates come down just a little bit, because I think we're seeing some signs the economy is slowing. This week's consumer price index was down, not a lot, but it was down. And so, whether that influences the Fed to raise interest rates like next month, like everybody thinks they will, by 0.25% or not, we don't know. There's still some things that have to come in. And with that in mind, I think what I'd like to do is go back to my screen here and just give you kind of a recap of maybe some of the things that I see happening here during the next maybe 3 to 6 months here. We're seeing that still today the inflation is kind of leveling off, hopefully. I'm seeing that the Federal Reserve will probably raise rates in June and probably in August. And maybe by then we're going to see some inflation numbers come down, and actually maybe we'll be touching some recession areas. One of the key major components here is that unemployment is just sticking really, really low. And so for inflation to go down, and for a recession to bear its head, you're going to have to see more unemployment, more first-time unemployment claims, and we're just not seeing that right now. The other thing that people are charging more on their interest rates, on the credit cards right now. And so when we look at credit card spending, it's just way above normal. And that's because, people's incomes have not kept up with inflation. And so inflation is just the real nitty gritty thing that the Fed is looking at. And then lastly, you've got things like in Europe and South America where they're seeing runaway inflation and they're starting to raise their rates. And even Japan is starting to see that too. So bottom line is, we still have a war going on in Ukraine. And, I think that's, I just hope they win, right? We're seeing that uh, there's still some bright spots in our economy. The other thing we're seeing is that home prices are just continuing to, steadily start to go back up again. In the first part of this year, they went down, but now it looks like they're going up. And by the end of the year, I expect maybe home prices to increase anywhere from 5 to 6%. So there's some good things out there. If I were you, I would go ahead and lock in when you get a house under contract. I would buy today versus waiting till tomorrow. And in the future, I'm going to have some, cost of buying now versus later scenarios that I'm going to show you. I just think that today is just the best day to buy a home. You're going to see that when interest rates come down, it's going to be a bidding war again, just like we experienced last year and the year before. And then you're not going to be able to find the house that you really want. And then when rates come down, you can always refinance. And I'm here to help you with that too as well. Anyway, have a great 4th of July. I love this country and I love clients like you that I get to serve and help get into a home. All right. Thanks.